All right, everybody, this is John, and welcome to the free video. And I was out all last week, and of course, typically when I travel, the markets get pretty volatile. Last week was no exception, and this time, instead of essentially, we kind of traded sideways, then had this explosive update on Friday. The S&P futures moved a whopping 120 points. That happens like 1% of the time. Follow-through day on Monday, and mostly a follow-through day today on Tuesday. A little bit of kind of selling into the close, and I think that's the extent of this move. We went through a -3 ATR back to the mean very quickly. The market was very, very short. We had a gamma squeeze, you know, all the fun things there where we get so short that people have to panic and get out. And that's what can happen when the 10-day moving average of the put-call ratio gets up here. So you had a lot of people getting short down here, and just bam. So what's interesting here is that the put-call ratio is still very bullish, meaning that a lot of people are short. It doesn't mean, you can see like right here, the last time that happened, we bottomed out, and then we just kind of trade sideways for a little while. And then you do want to see evidence of this kind of coming off that shows, oh, now people are buying calls again, right? And then they buy too many calls, and then that is when we top out. So that's kind of where we are now, and just kind of keep it interesting. The one thing I'm keeping an eye on here on the weekly chart too is that there is a squeeze setting up. Now the last one here, we had a really good move off of that, and now this could form over another couple of months or so. But we're asking today in the room, they're like, hey, do you want to look, what stocks do you like here? And I like stocks to the long side when the markets are in a squeeze. Then I'll buy calls on Tesla and Nvidia and things like that. Otherwise, I just think there's too many opportunities with 0DTE and stuff like that too. I mean, today was pretty clean. At the open, we opened up, we got buy signals right away, sold put credit spreads. We got to daily H2, which is 96% of the time, 94% of the time, kind of keeps prices in check. It actually went through that Friday and Monday. I guess I haven't seen that go back to back in a long time, but that shows you to the extent of the gamma squeezes. We did come in, and we just kind of ended the day at H1 at right about 43.60. So that was that, and then on NDX, kind of a similar day as well. We didn't quite get to H2, and then kind of came down and hung out just in a range there into the close. So for tomorrow, Wednesday, we're starting to have some economic data come out. So I do think that we're going to get a little bit more price action here on SPX. 4,400 is de facto resistance. We got close to that today, about 43.85. I think we could get one more push into 4,400. I don't really see us getting through that. So rallies now are kind of a little bit suspect. We want to be careful with them, and then there's not really much support until like down at 4,200. So the downside could get pretty crazy. A lot of data coming out this week, and so I would just be careful in terms of getting too confident on the long side here and then getting blown out to the downside. And there we go. All right, you guys have a good one, and I'll see you at the next update.
Hey, John here with Simpler Trading. Thanks for watching. If you enjoyed this video, comment down below and let us know what topic you want to see us cover next. Also, be sure to subscribe and click the bell icon so you can get notified when we release new videos. And if you want to watch us trade in real time using our own money, go to simplertrading.com and learn how to sign up. Good trading, and we'll see you next time.